So today I am with Tony Gallagher, APAC CEO of Guy Carpenter, and we'll be talking about market dynamics in the region and the upcoming April renewals and all things across insurance and risk. So let's kick off by starting with some of the market conditions and the dynamics within the APAC region. What are the factors currently influencing market dynamics?
I think there's a few things going on. Maybe the landscape. I talk about the landscape first of all. We had a renewal and we've had a lot of capacity coming into the market. Mm-hmm. If we look at our tracker in terms of the capacity index, there's 30% more capacity than we needed at the 1st of January. The prior year was around about 25 and 20. So 30%, we're getting up to the normal levels where there's enough capacity to supply the market. The demand increased by about 20%. And supply increased at 30%. So we're now having an increased supply of demand, mm-hmm. which drives certain factors in the market. In terms of the retention index, so this is the overall insurance retentions, that's gone up by 30% in the last 5 years. So you've seen a significant shift from reinsurance to insurance, and you've seen the reinsurance results improved, but also the insurance results, and you've seen an increase in supply. So these things are sort of outcomes of the market over the last few years. In terms of the fundamentals of the market, things like interest rates, inflation, climate change, these continue to work through the market. Change the demand and supply features also drives pressure around the sort of products and solutions that need to be delivered. And as this market changes and these pressures change, I think the supply and the retentions and the structures, we need to look at reinsurance solutions that are fit for purpose,
right.
Which is probably different answer a year ago, 2 years ago, and certainly different 1 year, 2 years in the future.
Well, you mentioned renewals, and we've got the April renewals coming up. So what are your expectations for the April renewals? What's going to happen then?
1 January, we saw our rate online index dropping by around about 7%, and we'll see that continue. So I would expect that the 7% to continue to carry through 1st of April. I think that the supply situation won't change. Mm-hmm. I think that the retention situation won't change, so I think we'll see some retentions increase slightly. I think we'll maybe a little bit of increased demand at the top of some of the programs. But overall, supply will outstrip demand, mm-hmm. and you'll see that the rates will continue to ease. Now, when I talk about 7% reduction, it's always subject to portfolios which are performing well, probably have more than 7%, and portfolios that are performing better mm-hmm. will probably have more than 7%. So 7% is an average. That applies to countries and also companies. So you get a bit of a range within that. But the overall trajectory, I would see 1st of April, 1st of July, the same trajectory occurring. Even though there's been some large risk losses, natural peril losses globally, in Asia Pacific, I don't see that changing the general dynamics of the market.
Okay. Now you mentioned, right, it's an average, 7% is an average, some will do better, some will do worse. So which lines of business do you think will do better?
CAT is really the driver in Asia Pac. There's about 70% of companies buy CAT. CAT's probably the real driver in terms of where you see the rates reduction. Around casualty, it's probably more of a slight reduction than that. Property per risk, probably more stable. Mm-hmm. And surplus conditions, once again, adjusting. But some of those conditions may adjust rather than the overall commissions.
When you mention CAT, you always have to mention climate change and climate risk. So it continues to be a very prominent theme in this region. So what kind of innovations in terms of products have Guy Carpenter come up with in order to address these challenges around climate risk?
I look at the market dynamics and I frame it in a word broader than climate change. I call it the changing nature of risk.
Okay.
So that talks certainly natural perils, so you've got frequency of flood, hail, windstorm, but you've also got changes in the way that properties are protected. Mm-hmm. You've got batteries and EV risk. you've got solar panel risk, you've got wind farm risk. So you've sort of got a combination of the changing nature of risk with climate change. And so when you look at solutions, I look at three different aspects to it. I look at product solutions, peril solutions, and profit solutions.
Right.
So around product, are there product-specific coverages which may be relevant to specific portfolios?
Okay.
So motor. Do you buy a motor quota share for your motor portfolio, or do you retain all of that risk? Peril. Do you buy a hail cover? Do you buy a specific flood cover? If you look at profit, do you start buying a structured solution around the long tail impacts across a specific portfolio? Or do you transfer your historical losses to a reinsurer? So I think that there's several solutions which are starting to take shape around the changing nature of risk, which is good for insurance companies, because I think that the way of looking at reinsurance becomes more bespoke. What's the problem I have on my particular portfolio, and can I buy a specific solution?
Right.
And the answer is yes, you can do that. Now, some of the solutions, the word parametric starts to come up. Specific peril, specific trigger, specific location.
Yeah.
And so I think you're going to start seeing solutions such as these come into the market through 25 and through 26. Now, the driver of these goes back to my first comment around retentions. The insurance companies are retaining more risk, and I call that one of those, when you talk about climate change, attritional cat.
Right.
So if climate is changing and it's changing, and flood becomes more frequent, can you buy a specific flood cover for a specific location where the frequency is increasing? And the answer is potentially yes.
Right.
And that might be the form of parametric. That also covers not only commercial insurance, but also government solutions. So government, where you have the protection gap, these will become potentially solutions for governments too, because the economic loss is becoming more significant than the insured loss in some situations too.
Okay. Now, you mentioned changing nature of risk. You've already mentioned some of those risks, but what other significant risks or challenges within APAC are concerning to Guy Carp and your clients?
To me, systemic risk is continuing to evolve. So that's where you have unconnected losses being connected.
Yeah.
So cyber's an easy example of that. But you've also got risk such as, I think the supply chain is becoming more interconnected. So I think systemic risk is something we're still unraveling, we're still understanding. It's not a challenge that the insurance industry will walk away from, but it's something that we need to understand as we go forward. I think that the changing nature of risk, that drives a lot of ideas around products and solutions, and I think that will become a driver for the business as well.
Yeah.
Other than that, in terms of the overall environment, I think we may see some more mergers and acquisitions occurring throughout Asia. And part of the reason that will be is technology. And so the cost of technology is high. It's available, but it's high. And so it's going to create some difficulty when you have technology-enabled companies able to deliver more efficient solutions than those without it. And the gap begins to grow between the bigger companies and the smaller companies. So technology is something which is going to be at play for our clients as well.
And you mentioned this mergers and acquisitions. You mean across the industry, insurers, brokers, and reinsurers?
To me, when I talk about that's more around the insurance space when I look at it. You're seeing a little bit of that in Australia at the moment with the motor clubs being sold, and you're seeing a little bit of that in Asia. So my main focus really would be around the insurance companies in terms of that activity. You've got a lot of smaller insurance companies throughout Asia Pacific, and it's finding their niche. One of the areas which is growing, is around the MGA space, and that will be interesting as well.
You overlook the entire region, right? And so there are varying regulatory demands and environments across the region. So how do you balance and juggle all of those, right? the compliance needs while still maintaining your competitive edge?
Yeah, we have a capital advisory team globally,
Right.
where we work with our clients around the way that they use their capital and utilize reinsurance to help manage earnings and capital volatility. So with the increased retentions, you've got an increased earnings pressure.
Yep.
The role of the regulator, I often think, is around solvency and sustainability. They want insurance companies to be solvent and sustainable through the cycle.
Yep.
So you may have a year where you make money or lose money, but in the long term you want to have a stable business. Reinsurance helps that sustainability. So we look at the earnings. Are there particular covers that help smooth earnings? And so we look at solutions, various structured solutions, where we can help smooth the earnings through the cycle. So one year you may need recoveries and the next year you may not. So across a period of time, can we help protect the solvency and the earnings? On the capital side is making sure you've got sufficient capital, sufficient reinsurance to pay for those large events. And that's really around the modelling services and making sure that we've got the right protections in place so that when the worst event happens, you get payment from good reinsurers who are willing to pay on time, and that's going to become very important around solvency as well.
Which lines of business or which markets do you see the most potential for growth this year in 2025?
I see many of the Asian countries still growing. I think there's huge potential for growth generally across Asia without highlighting a specific country.
Okay.
I think that the new product penetration is still relatively low, so I think there's a big opportunity there. MGAs I see continuing to build out, and when I talk about MGAs, it's capital light insurance vehicles where you have good knowledge running a business and building it. And so I see that as a trend globally, and I see it as a trend building in Asia too. It's a way to bring competition to the market, but also have a strong underwriting ethos within those. And so I see these future MGAs, like All Capital Light, I see that continuing to build out through 25 and through 26.
Right.
And so as you get this consolidation, you also have these MGAs, and some of these MGAs too will bring product innovation, which is great for the market. New products, new solutions, that will also grow the overall insurance pie.
Okay, so I think that concludes the interview for today. Thank you so much for your insights, Tony.
Thank you very much. It's been a pleasure.